Okay, seeing none. Do consent items, the 2023 sales tax chart, any interest in going over that before we jump into general business? No? Okay. So the first up is the annual comprehensive financial report and audit.
Great, thank you. I'm Nancy Wishmeyer, the controller, and with us today on the call from our external audit firm Forvis is Marcy Ardan, who is our managing director on the audit, and also Carmen Jeffries, who is a director on the audit. And I wanted to also recognize Carol Toth, who's on the call today. She is our city's accounting manager. And Carol and her staff are really the ones who are primarily responsible for producing the city's annual report and also for managing the single audit process. So Carmen and Marcy are going to review with you certain information regarding the 2022 Annual Comprehensive Financial Report, or ACFR, and also the results of the audits. But I'm first going to provide just a brief overview before I turn it over to them. So first of all, the city's 2022 audited financial statements and the single audit report have been completed and they're ready to be placed on the city's internet. And we're going to send to you and to all of council the links to those reports after this meeting. And in your packet, you have the Forvis report to City Council and the Management and Finance Committee. This report summarizes the financial audit and the single audit results. And it also identifies any issues or reportable items that were encountered during the audit. And then the report includes a number of other items. So first of all, there's a schedule of audit adjustments that were passed for correction, which basically means that those adjustments weren't recorded due to being immaterial. And then also attached is the management representation letter. And this is an outline of the representations or the statements that city management is making to the auditors. And then finally, the report includes the single audit report. And this, of course, provides the results of the audit of the federal grant funds that the city expended during 2022. So concerning the financial audit, we received an unmodified or a clean audit opinion on the 2022 financial statements. And we were notified this year that the city has again received the Certificate of Achievement for Excellence in Financial Reporting for the 2021 ACFR. So now the city has received that award for the past 36 consecutive years. And this is a very important award because it shows that city staff follow the principles and the best practices for governmental accounting and reporting. And we also believe that this 2022 ACFR will qualify for the award. And then concerning the single audit of our federal grants, again, we received the unmodified opinion, clean opinion. And of note, there were no single audit findings this year and no internal control deficiencies or weaknesses. So now I'll turn it over to Carmen and she will share the auditor's perspectives with you.
Oh, Carmen is having technical difficulties right now, Nancy. So this is Marcy. I am the managing director on the engagement, and I apologize for not being on video. My laptop camera does not work, and I am traveling. So I apologize for that. But anyways, as Nancy mentioned, we did give unmodified opinions, and just for your guys' reference, those are the best level of opinion you can get, or what we consider a clean opinion. And again, no single audit findings, which is fantastic because we had 5 major programs. So a high volume of federal funds is flowing through right now. So really that speaks volumes to the internal controls over the federal compliance for the city. And I see Carmen just got on. So I'll give her a minute to see. She was going to go over our letter, but if not, I will go ahead and start that with you.
Can you hear me?
We can hear you.
Okay, yay. Okay, well, I'm sorry you can't see me because I can't get my camera to work right. However, as long as you can hear me, I think we should be good. So thanks, Marcy, for the introduction. Yes, I am prepared to go through our required communications. So good afternoon to you all. Thank you for this opportunity. In your packet, you have been provided with our required communications. So I will go over those at a high level. If you have any questions, please feel free to ask as I go through the presentation. So it will start with the scope of our audit. We conducted our audit over the financial statements in accordance with or as of the year ended December 31st, 2022, in accordance with our contract that is dated November 7th of 2022. Our responsibilities are to form and express an opinion about whether the financial statements have been prepared by management with oversight of you all, as prepared in accordance with accounting principles generally accepted in the United States. Additionally, our audit is also prepared in accordance with auditing standards generally accepted in the United States of America and government auditing standards issued by the Comptroller General of the United States. That's a mouthful, and is noted to say that we obtain a reasonable rather than absolute assurance about the financial statements. Thus, we perform procedures on a scope basis and do not look at every single activity that occurs. We are required to be independent, and we are required to provide you with the information that you have in hand. Your responsibilities, of course, as those charged with management, is from an audit's perspective, the fact that we perform our procedures does not relieve you of your responsibilities regarding the statements. We also provide you a report over the governmental auditing standards, specifically the internal control over financial reporting and on compliance and other matters based on the audit of financial statements performed in accordance with GAS. Yes. While in that opinion, we are basically saying that we have reviewed internal controls as we have performed our test of compliance. We review those, but we do not test for operating effectiveness. So we are not opining on the effectiveness of those internal controls. We're only saying that we have reviewed those. We also perform our audit over uniform guidance, and for that, we provide an opinion over the compliance for each major federal award program, the report on internal control over compliance, as well as the schedule of expenditures of federal awards. In that audit, our compliance audit, we also obtain reasonable rather than absolute assurance about whether non-compliance with the types of compliance requirements as described in the compliance supplement that could have a direct and material effect on the major federal awards occurred. That was a mouthful, but that is everything that our audit is and everything that you have been provided. We also want to make note that we do not audit the financial statements of the Havana Business Improvement District, the Parkside City Center Business Improvement District, and the Citadel on Colfax Business Improvement District. All of those are audited by other auditors, and we have referred to those other auditors in our opinion. We do review and have had discussions with those other auditors to make sure that everything is correct in our statements. We want to also make note that the audited financial statements are presented along with management's annual comprehensive financial report. Management or those charged with governance is responsible for preparing that annual report. We review for consistency purposes. We make sure that everything from our report and other things that are noted in the annual report are consistent, and that is the basis of the work that is performed over that additional other information. Now on to the qualitative aspects of significant accounting policies and practices. We review significant accounting policies, which are described in Note 1 of the audited financial statements. We also look at any new standards which went into effect in the current year. And I'd like to make note that GASB 87 leases went into effect in the current year. I have to make note at this point to let you guys know that was a huge undertaking for the finance department. They've been working on that for over a year. And so we appreciate that. And we were able to implement that standard correctly and with no issues. We have no matters to report on our unusual accounting policies or alternative accounting treatments, nothing there. We review management's significant areas of estimates during the audit. Those are listed, you'll see in your packet. We test those for reasonableness and didn't find anything there. We also review financial statement disclosures, significant ones and sensitive ones, which are also noted here in the bullet points under financial statement disclosures, just to ensure proper disclosure. As we noted, there was the adoption of GASB 87, so there were additional policies and principles that did change with that adoption. In the packet, it does give you an understanding of what the implementation of GASB 87 leases actually means. But to summarize all these words that are on the paper, basically what happens now is it brings the lease assets and liabilities onto the face of the financial statements. Whereas previously there was rent expense, there's no longer rent expense. From the standpoint of leases, it also there are no longer capital leases. There are no longer operating leases, but instead they're reported a different way. So that is really what 87 did. It required the city to analyze every lease that it had gone into over the course of time. So that was, as I said, a very huge undertaking. We are required to inform you of any audit adjustments that were identified during the audit. There were no proposed and recorded adjustments made. There were 2 unrecorded misstatements, which both are immaterial individually and in the aggregate. However, they were more than trivial, and we needed to communicate those to you, and they are listed in your packet, as well as a part of the management's representation letter. Significant issues discussed with management during the audit included the implementation of 87, and then the addition of the police retirement plan as a pension trust fund and related pension accounting. Other material communications, which should be included in your packet, are the management's representation letter. We always want to make you aware that we have had oral communications with management on other deficiencies in internal control. Those were things that we identified that were best practices, things that weren't considered material weaknesses or significant deficiencies, but just things we wanted to bring to management's attention. So therefore, we performed that through oral communication. Throughout our presentation, we always want to make you aware of any future accounting pronouncements that are upcoming. The city is excited to know that GASB 96, subscription-based information technology arrangements, that is effective for the period ended 12/31/2023. And in a sense, that is the lease of subscriptions. So basically, 96 just brings all the subscriptions, the liabilities, the assets, those all come to the face of the financial statements, very similarly to what happened with the leases. So the city is well underway of implementing that standard this year. Additionally, there are 2 standards that become effective for fiscal period ending 2024, and that is GASB statement number 100, accounting changes and error corrections. That is going to change the requirements for accounting changes and error corrections. And then GASB statement 101, compensated absences, which changes the guidance for compensated absences under the unified model. Additional attachments that are included within your packet include the audit of compliance for each major federal award program, basically the single audit, which I will go over in just a second. As I stated, you received the management representation letter, as well as the schedule of uncorrected misstatements. In regards to the single audit, I like to go over the schedule of findings and question costs, which is my page 12. I'm not exactly sure what page it is for you, but it is the schedule of findings and question costs. And basically, it gives a very, very good summary of what this audit entails. From a financial statement, as Nancy made reference, the city received an unmodified opinion. There were no significant deficiencies or material weakness identified, or no non-compliance material to the financial statements noted. From a federal award standpoint, you also received unmodified opinions, and there were no internal control significant deficiencies or material weaknesses that were identified. The programs that were audited in the current year were the CDBG Entitlement Grant Cluster, Home Investment Partnership Program, Emergency Rental Assistance Program, Coronavirus State and Local Fiscal Recovery Funds, and the High Intensity Drug Trafficking Areas Program. So all those programs were audited, and we are happy to note that there were no findings in any of the programs that were under audit. The city does qualify as a low-risk auditee, which is always good to know, because that means we audit less of your total expenditures rather than more. And just as a note, I always like you to know that your total expenditures were $25 million for the course of the year. Other than that, we will make you aware that there were 2 findings from 2021 that both were related to the Emergency Rental Assistance Program, and both have been implemented in 2022. So there is nothing further to report there. Other than that, that sums up everything that we are required to communicate. Were there any questions, comments, concerns over anything that has been stated thus far?
Any questions?
I have one.
Yeah, go ahead.
Yeah, you mentioned the police retirement plan, that there was discussion on that, but no findings.
No, ma'am, there were no findings. Marcy, would you like to further expand on that?
Yeah, so the city adopted the police retirement plan. It was effective January 1st of 2022. So really the discussions around that were whether it met the definition of a pension trust fund that had to be reported in the ACFR. So if you actually look, there's a new fund financial statement in the fiduciary funds for the police retirement plan. But there's a lot of analysis that goes along with that. And the plan was a hybrid plan. So it had both a defined benefit and a defined contribution component. So it made it a little bit more complex to analyze. So we thought it was important just to bring to your attention that that was a newly reported in this year.
But it's audited?
It is audited.
Oh, okay. Okay. Thank you.
Any other questions? Okay, Tina, thank you for the update. And I guess this will just go now. Will you do a full presentation to council, or is this for information only for us?
This is Dustin. Oh.
Go ahead.
Go ahead, Nancy.
Oh, I'm sorry. This presentation is information only for the audit committee, which is the management and finance committee. But we will be sending this report on to council, so they'll see the report.
All right, thank you. So next up, I'm going to suggest that we take items 4B, C, and D together. They're the intergovernmental agreements with the 3 counties for the upcoming election. So seeing, if there's not any objection to us doing that, I will kick it over to Katie, and you can just handle those next 3 and we can move forward.
Okay, sounds good. Katie Rodriguez, City Clerk. So these 3 items are for the IGAs that we have to sign with each county that we coordinate with for the regular municipal election held in November. These are, there have been no changes from previous years. And the next step for these IGAs would be to go to study session and then a regular council meeting.
Okay.
And then if anybody has any questions.
Questions?
Just, all those issues we had back, I think in 2019 have all been resolved with the counties, I would imagine. I mean, we didn't have any problems in 2021.
Yes, are you speaking about the ballots yes, that has all been resolved. And we did do redistricting recently. So we've been working with the counties to make sure that they have the correct ward.
Okay, great. Thank you.
Other questions for Katie? Okay, seeing none. Any objection to moving these 3 items forward? Okay, move on to study session. Thanks, Katie. Next up is the review of our moral obligation policy.
Yes, good afternoon. This is Teresa Sedmak. The city has a moral obligations policy, which was originally adopted in 2011, and it was modified last year. The current policy was included in your packet, and it states that moral obligations or outstanding moral obligations shall be reviewed and reported annually to council. So that is the intent of this presentation. In general terms, the policy defines a moral obligation and outlines the criteria the city will utilize when considering new moral obligations. The city currently has 2 outstanding moral obligations. The first one involves the convention center and parking facility, and the second applies to the Bioscience 3 building on the Fitzsimmons campus. So as far as the convention center and parking facility, you may recall that the original loan on the convention center and parking facility was refinanced last October into a long-term loan with NBH Bank. The par amount of that loan was $20.645 million at a rate of 4.06 through its maturity in 2039, which aligns with the end of the TIF period. Net revenues from the project are pledged solely to the loan, along with tax increment revenues associated with property taxes, sales taxes, and lodgers taxes. The moral obligation is such that if the debt service reserve on the transaction falls below its required level of 1.7 million, the city will replenish it to its required level. We have been subsidizing that project in lieu of drawing on the reserve to satisfy debt service. However, AURA has subsidized the project. Total subsidies from 2020 to 2022 were about $1.1 million on that project. The refinancing of the original loan freed up some cash, about $900,000. That cash has been used and added to net revenues sufficient to satisfy debt service on the loan this year. It is anticipated that there may be subsidies from the AURA budget starting again next year. So that's the convention center. Bioscience 3, that's a facility that's 118,000 square feet. It's a 3-story building providing space for wet and dry labs, office suites, warehousing, distribution, and it's located on the Fitzsimmons campus. Similar to the convention center and parking facility, our moral obligation is tied to a debt service reserve of $2.5 million in the event that that is drawn down to make debt service on the loan. A recent default of one of the building's tenants has put pressure on that building, and they have made some modifications to remain in compliance with loan terms. No other reserves have been required to meet the scheduled debt service on the existing Bioscience 3 loan. It has been proposed that the Bioscience 3 loan be refinanced. They are currently advocating for a refinancing of the Bioscience 3 debt and the borrowing of additional cash or new money, which could be used for either Bioscience 3 or other buildings within the Fitzsimmons campus. The principal that they have suggested at this point is $53.17 million. That includes $35.5 million to refinance the existing loan, plus about $17.7 million in new money. The loan is projected to mature in 30 years or 2053 unless it's called earlier. So if the city were to provide moral obligation support for the new loan, it would consist of the replenishment of the restricted cash reserve or the debt service reserve in the amount of $3.229 million. And that would be used in the event that it was invaded to make debt service on the loan. I believe that Melissa Buck, one of the FRA's advisors, is on the phone to address that financing and answer any questions you may have in regard to the financing. This report is information only. We will be awaiting any instruction from the committee as far as how they would like to move forward. So Melissa, I don't know if you wanted to do a short presentation in this regard or just answer questions on the transaction.
And before we hand it off to Melissa, this is Terry. I did want to add a couple additional things just for context. Number one, the city of Aurora did at the time when they issued the moral obligation for Bioscience 3, provided a letter to the FRA and just indicated to them we would only consider one moral obligation at a time. In other words, the addition of this other project or projects that Melissa will discuss with you is not part of what we had instructed Steve Van Nerden and the FRA previously. So that came as a letter. It was included in your packet. You should be able to see that it was very clear that this was a bit of a surprise to the city given that instruction. Second of all, I would like to also add is that, you know, the city owns and operates the conference center and the parking structure for which we have the outstanding debt and moral obligation for the Hyatt. So we have an ownership interest, and we also have other resources to back us up, which you've heard we talked about a little bit with the AURA. For Bioscience 3, the city of Aurora has no ownership and does not receive any revenues. There is no offset to that. And as you're listening to Melissa, I just would like you to keep in mind that our moral obligation is very important and should be looked upon as very limited in use and for projects that benefit the city, and also be very careful. That's why we did come back and make some modifications to our moral obligation policy last year to kind of strengthen where we would apply it and why.
Terry, and before we hand over, I know I see Councilmember Bergan's hand up, but I just wanted to clarify something. So it was mentioned that the new moral obligation would lead to an additional $17 million. That would go to FIC or to the Metro District?
FIC.
So it wouldn't go to the city, right? FIC, okay. And so what you're suggesting is, and for Councilmember Bergan and Jurinsky, as you both know, I'm on the FIC board. We talked about this at our last meeting, and that's part of the reason why I asked them, Terry, to have this conversation, because I think it's an important one for us to have, is I do see the Fitzsimmons campus as potentially adding enormous value to the city, but I wanted to make sure that we have a very eyes wide open of what it means to extend a new moral obligation bond. And with that additional revenue, if we were to move forward, are there things that would be of benefit to the city, other projects on that campus that we would want to see those dollars go towards, and not just allow it to go out to other projects that might not have any benefit or help offset some of the expenses that we would otherwise incur to keep that campus moving forward. So but with that, I want to hand it over to Councilmember Bergan to ask your question.
Thank you. Terry, so I guess along the same lines as Councilmember Zvonek on what that capital improvement plan would look like and what it goes towards, but on the moral obligation, what is our liability? So if they default on the loan, I know we replenish the reserve, but how does that affect our credit, and what is that liability? It looks like the new loan would be like it goes into, I guess, 2053, and part of my question also is why did they finance with a balloon payment?
And I'll defer to Melissa on the balloon payment side of it, but it does have a significant impact to our credit rating if a default occurs and we're asked to replenish and we don't. So the moral obligation basically requires the city manager to bring forth the dollars to replenish, and I think it's over $3 million a year under the new proposal. So if you think about that, that would be $3 million ongoing, potentially, that the city could be on the hook for through the end of the debt,
Right.
or until they refinance, depending on how that we would restructure this moral obligation. So if we didn't replenish, And so we present it to city council, we don't replenish. It would really damage our reputation, our credibility to access markets, and it would be troublesome for us into the future in accessing markets for our projects. So you should probably consider any moral obligation as an extension of our credit worthiness, as well as an additional liability on our books. And I did want to mention also as well that, you know, we received this proposal. We have not really had enough time to dig into the details of it. So that's why we're not presenting a recommendation on their request today. Our thought is just to give you an update where we're at with the moral obligations, give Melissa an opportunity to present what they're considering, but we do have a lot of due diligence to perform if this is something that you want us to continue down the path toward. We had looked forward to the opportunity to be relieved of this moral obligation at the end of 2024. That was when it was going to go away for Bioscience 3. So, you know, it was a bit unexpected to hear that this was coming back to us for another request. And I think it's something that's very valuable and something that we should consider in that process. Is there's an enormous value to the city to offer this to anyone.
Yeah,
And that's
so
why-
just to be clear that we would be on the hook for $3 million a year until the loan is completely paid off. You said unless they were to refinance and then be able to make those payments on their own, correct?
Yes, and Teresa, do you have the dollar amount perhaps?
It was, hold on, 3.229, I believe.
Yeah.
No, hold on,
So-
looking up my notes here.
So, you know, the first potential for refinancing would be about 10 years out, which is usually the call date. So I'd say at the minimum, you're looking at least 10 years of being on the hook for that additional annual cost, potentially. I mean, you know, they've not asked for any money, and we've, you know, been staying on top of this with the folks from the FIC and getting annual updates. But I would say, you know, there is some risk because, first of all, we don't own anything. So, you know, there's not an ability to offset it with, you know, decisions that we would make.
Oh,
And we don't get any revenue. So, you
Yeah.
know, we have no control of that either.
so you just brought up something, we don't own anything. Is there any way to craft the moral obligation so that we would own an asset if it defaulted?
We would have to go back and have a discussion, and I'm sure it would be a negotiated process as to what we could get in return for that value. I see this as a significant value. Just like in our own personal lives, you know, we are all careful about who we would co-sign for. This is no different than a co-signing process in that, you know, it could become our liability, our responsibility. So there's significant value to it that council should consider.
Yeah. And this is where Councilmember Bergan Jurinsky for situational awareness. We have a meet tomorrow, as you two might recall, we passed a resolution council that essentially allowed staff to assist us in going out and doing an RFP for an updated master plan. Again, I think all three of us agree that campus holds a ton of potential and can be a major driver of revenue for the city, but we are, in some ways, there's a little bit of blind faith there. There are three members of council, myself, the mayor, and Mayor Pro Tem Gardner, who sit on the board. But one of the things that I was talking to the team about, to Terry and to Jason about, is that if we do this, I would want to make sure that, again, there are some infrastructure costs and other things that the city are currently there would be responsible for in order to help that campus open up, that we would want to make sure that those dollars are going towards things that are going to be beneficial and offset what we would otherwise have to put forward. Because again, if we're not going to own any asset, we should make sure that we are getting the maximum value out of any moral obligation that we provide them. So again, that's part of the reason why I wanted to start this conversation. And I know that Teresa is finishing up and is, I don't know how far away, but it was pretty short notice in doing the total due diligence before making a recommendation, thumbs up or thumbs down. But I wanted to at least kick this conversation off now. So if there's not, Terry, if you don't have anything else, I wanted to hand it over to Melissa and let her run through her stuff.
Not at this time, thank you.
Okay.
Right. Thank you. So I don't have anything formally prepared for this meeting, just given the short notice. What I would say is for the FRAs, the moral ob request that we've made to the city, 100% agree with Terry that this is very valuable to the FRA. And what it would allow is for the FRA to get an investment grade rating. Yes, the city would be signing on to pay debt service if the debt service reserve were tapped. However, the idea is that if that were to happen, then any unrestricted revenues from the FRA would flow back to the city to repay that obligation. So in our minds, it's not a grant, it's more of an advance. That's how we would structure this. And from our perspective, it would demonstrate further the city's commitment to building out this community and creating it a biotech hub for the region. So in terms of how these funds would be spent, about 35 million would be used to refund the existing Commerce Bank loan. To your point, Councilmember Bergan, I'm not entirely certain why this was structured with a balloon. It happened before I came on board. And it's a pretty common structure for a lot of bank loans. Most of the FRA's projects were done on a project by project basis and really were structured more like commercial real estate loans than they were a public finance loan that we would typically see. So as I mentioned, about 35 million would be used to refund the existing loan. And then about, in terms of net proceeds, we're looking at about 16.5 million would be used to fund the build out of additional lab space. And in talking to the FRA, the idea is that they would be leasing this out to for-profit entities. So indirectly, the city would be seeing some additional tax revenues come in from those for-profit companies.
Any questions?
I have one.
Yep, go ahead.
And I guess it was referenced that one tenant defaulted. So the build out is still necessary in terms of attracting more
Correct.
businesses. And the tenant that defaulted, I would assume they have, aren't there terms with each tenant that they have to pay back?
Yes,
terms?
there are terms. I don't know if Steve or Lyle, I see you're on here. I don't see April is on here. You probably know more about the tenant that defaulted than I do.
I think I'll let Thomas answer that.
Yeah, Melissa, I'm on the line. Can you guys hear me okay?
I'm sorry. I didn't realize you were on there.
Yeah. So we did have a tenant that defaulted. In our perspective, kind of a blessing in disguise. They were one of the first tenants that signed up for Bio3 when it was still a concept stage building. And they got a way below market rate, like $15 a square foot. Right now we're leasing at $40 to $50 a square foot, depending upon the TI build out. We did inherit a nearly completely finished clean room for them. So we will have that for a future tenant. And so it was unpleasant that they defaulted. Obviously, we hate to lose a good tenant, a company that had been with us for a long, long time on the campus and driven a lot of innovation. But, business is what it is. And business chooses, the capital markets choose winners and losers, and they got chosen to be a loser, unfortunately. So going forward, we're now actively marketing that space. We got a number of potential tenants in the pipeline, but they just didn't default. They're insolvent. They're actually going through liquidation. And so we're going through the process to get a piece of what we can. But there's just not going to be much there. We are going to walk away keeping the lab space that was built out. We'll keep the clean room. We'll keep the office space. There are certain pieces of equipment that we're going to retain. But all in all, there's not much left besides intellectual property, and how valuable that is. I think that's what the lawyers and the bankruptcy courts are arguing about.
Yeah, so it sounds like, I mean, you'll be able to fill that space with a higher lease. So,
Absolutely,
So-
that is the absolute goal.
okay.
Yes. And the other thing I would add to that is, you know, in sizing the bonds and especially the new money portion, all we've done is look at the current rent roll. We haven't included any additional growth or anything like that. So it's actually a very conservative projection.
Other questions? Okay, is there anything else, Terry, on this topic that we should cover? I know that we're going to have the full due diligence done tomorrow. I believe it's tomorrow. The FIC, we're meeting to review the RFPs for the updated master plan, which will be something that I think it's going to be important for this, right? If the city were to move forward with extending our moral obligation, we'd want to ensure that there was an updated master plan that could support the growth and future revenue generation that campus we think could provide for us, but want to see that happen. And then I guess, Terry, whenever we get that final due diligence done, bring it back to us, or I don't know what the best next step is.
Yes, I think our next step is to reach out to UNB and have more discussions with Melissa and probably Thomas as well, just to understand the assumptions that have been made in what was proposed. We really do need to understand that. I also wanted to point out the fact that a lot of our revenue that's on the campus that has been generated has been within TIF areas. So it's not necessarily a return back to the city of Aurora. It's really paying off some of that infrastructure within the metropolitan districts. I'm not sure how that fits in with these new proposals. We need to look at that as well. But we'll dig in with our financial advisor, our municipal advisors on the line, as well as Kutek Rock, and we'll get with Melissa and bring back what we find.
Okay.
I have an additional question. This is Teresa. First of all, I'm assuming from the conversation that you want us to proceed with the due diligence, and we will do that. Wondering if you want us to analyze the entire transaction, just the refinancing part, or the total transaction with the new money, or both. We could do both.
Yeah, I would say, and I'll leave it to my colleagues to agree or disagree with this, but do both, because I think just knowing what both would look like from our perspective would be valuable information.
Okay. Thank you.
Okay, thank you. So final item 4F, internal audit charter and quarterly update.
Thank you. I'm going to share my presentation. All right. Did that go through?
Not yet. Or at least, oh, here it goes.
Okay, perfect. So Michelle Crawford, City Auditor. So today I'm going to start with the internal audit charter. So we are currently preparing for our first quality assurance or peer review, which hopefully will take place in 2024. As part of that, one of the items required by our standards from the Institute of Internal Auditors is to have an internal audit charter that formally documents our purpose, our authority, our responsibilities for the organization of internal audit. The standards require presenting the charter to senior management and to the audit committee, which is MNF, for your approval. In the backup was the documentation of what the internal audit charter says. So with that, are there any questions around the internal audit charter itself?
Any questions?
I have one.
Yeah, go ahead.
And this might be a separate audit. I'm just trying to remember, I had asked for us to do an audit on our different, basically homeless services. And I don't know where that was left off, if that had to be a separate outside entity. And I think that's what it was. So it wasn't, I guess it wasn't done obviously internally.
Yeah, I can follow up with you on that. We've looked at them a couple years ago, but I can follow up with you separately and see what that was and see what ended up happening with it.
Well, I actually made a request to this committee, I don't know, last year sometime to have to have the nonprofits audited, and I was told that we had to hire an outside firm, and no one ever got back to me as to what that decision was.
Councilmember Bergan, this is Nancy Wishmeyer. I think you are talking about the agreed upon procedures that we did with the nonprofits. And our Forvis auditors did perform those procedures. They're actually still in the process. They're almost done. There's just a couple of things that they have to follow up on, but they did do those procedures.
They couldn't do a financial audit, which is what I asked for.
Okay, we did a particular set of procedures that included looking at, it was a sample set of nonprofits. So they did a statistical sample set, and they looked at the financials of those nonprofits, but also in addition to that, they did some other procedures. And that is what I know that Forvis was doing. There may have been another homeless audit that I'm not aware of, but that was the agreed upon procedures that Forvis performed.
Okay. So I can get a report or get that report?
Yep,
okay,
will do.
Are there any other questions as far as the internal audit charter included in the backup? Okay, and with that, I would just ask, would the MNF approve the internal audit charter for us?
Any objection? No. Okay.
Perfect. Okay. So next, I'm going to go through our quarterly update. So currently underway are the annual risk assessment process. We use those to develop our internal audit plans for the next year. Additionally, the police auditor has been hired and he will be starting next week. The engagements completed this quarter was the Public Works scrap recycling, and I'll be giving you an overview of that shortly. Currently active is the IT operational assessment, governance practices, and the calls for service response. Those three engagements are all in the reporting stages, so they're ending, the final reports hopefully coming soon. Also underway is facilities management and review of outliers to the competitive purchasing process. Audit plan updates, we are removing the culture survey from our annual audit plan. Management has assigned ongoing responsibilities to human resources for future culture surveys. So that will be removed from our plan. Engagement tracking updates. So this graphic depicts all the engagements as of June 30 that still had outstanding recommendations. There were 23% that remained pending. On the next slide, which is also in the backup as part of our quarterly update, is more detail. It gives you the audit plan year, when the report was released, the engagement's name, and then how many of those recommendations remain pending. Next, I'm going to be giving you an overview of the Public Works scrap recycling engagement. Internal audit received concerns with the scrap recycling process at Public Works. I would like to take this as an opportunity to thank those employees that brought those concerns forward. Public Works traffic section regularly recycles broken and out-of-date materials, such as signal boxes, traffic signs, broken materials. The audit objective was to determine if adequate controls existed around the scrap recycling process in the Public Works section. Our conclusion is that adequate controls did not exist and funds cannot be accounted for. The traffic sections received recycling proceeds in cash for years. We cannot determine how much was received and whether it was used appropriately. Public Works cannot provide any receipts for cash recycling proceeds, nor for any expenses for the use of those proceeds, outside of $114 in receipts for beverages and pizza in 2022, and a $51 cash receipt turned into the cashier's office in 2023. We did anonymously receive 13 cash receipts showing employees did receive cash proceeds in 2021 and 2022, totaling $2,961. We cannot determine what happened to those proceeds due to the lack of documentation. We also cannot account for 2 checks payable to the city for $460 from a local scrap recycling vendor. Our recommendation was to file a police report for the unaccounted for funds. I assisted the Public Works financial technician with filing that report on June 15th. Public Works had not developed policies and procedures for handling scrap recycling proceeds. Policies and procedures ensure that adequate controls exist to safeguard city resources and assets. Our recommendation is to develop policies and procedures, including that only check payments should be received and identifying the businesses to be used. One of the things we learned in this audit is that some scrap recycling businesses operate on more of a cash-only model. Controls over scrap recycling need improvement. It was not always clear who was actually taking the recycling to the vendor and when checks were being turned into the financial technician. There are no recommendations for handling cash because, again, we're recommending that cash is no longer received. Our recommendation for the process is that staff initials the receipts from the vendor when they take it, and that the financial support technician logs payments when they're received to be able to track it throughout the process. And with that, are there any questions?
No questions. Yeah, I want to echo what you said. Thank you to the employee that brought that forward. I hope, I'm going to talk to our city manager. I think anytime an employee brings forward something that could ultimately save the city revenue in long term, I hope that there's some sort of, one-time bonus or something for that employee because they've identified something and added additional value to the city. But I have no other questions. Councilmember Bergan, did you have anything?
I just want to make a comment that I thank you for the work on this and for the recommendations you're putting forth.
Yeah, thanks, Michelle. Okay, anything else you need from us, Michelle?
No, thank you.
Good. Okay. Any miscellaneous matters for consideration? I know Councilmember Bergan, you had a little technical difficulty and I got started prompt. So was there any changes that you wanted to, the minutes? Did you have anything?
No, I was actually absent that day. I was at CML and then consequently got sick. So wouldn't have made the meeting anyway.
That's right. Okay. Well, with that, I think our next meeting is August 22nd. So we will see you all then. Does that work for you? I assume we're all good. Okay. All right. I appreciate everybody. Thank you all. Have a good afternoon.
Thanks.
Yeah.
Bye.